The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Looking good, Billy Ray. Feeling good, Lewis. Well, welcome to the offices of Duke & Duke, 100 South Broadway, Philadelphia, Pennsylvania. We're going to start out with the German DAX. As you can see, we had that minor rally over the last 6 or 7 days, and it didn't get very high, and then it certainly has rolled over. Now, if we take a look at the FTSE, and of course it's in the news all the time because of the Brexit, you'll notice that it hit exact 61% retracement of the high that we made in August. That was also equal to the move that we made from June through August. Both of those moves were exactly equal. Once again, showing you that some of these markets, even though they don't act the same way all the time, they do repeat over and over again. And as the Bible says, as above, so below. Boys and girls, we have something really big happening today. I don't know if you're going to see it on the opening or not, but you could. And let's just take a look here at our favorite bank, the one that everybody loves to do business with, Goldman Sachs. You'll notice that we had that bottom down there on the 17th. We had a 3-day rally that stopped exactly at the 61% retracement at 238. Boys and girls, it's going to open below the C point of the 20th of September. That is not a very good chart. And as you can see here, the ABCD structure on this takes you down to test the low that we made back in July. This is not a good sign. If you follow the principle of following the money with Woodward and Bernstein, this could be very, very important. We alerted you to that effect a little bit in the this newsletter this past week because we were watching the banking index, very, very closely. If you refer to that, you'll see that we were pretty much spot on saying that that would have been the high of that move. And as you can see here, we are already gone below that level already from this week. In other words, we hit that high up there at around 111, and now we're trading below 106 already. So here again, it's showing you that something is happening in the money, where the money is going, and that's pretty much what we're looking at this morning. Now, what I'd like to do is we're going to take a free trip, boys and girls. Get your bags packed. We're going to hop on the old aeroplane. We're going to go across the Pacific Ocean to our favorite place over there in Asia, Hong Kong, and we're going to look at this Hang Seng Index. I was asked to review that for one of the newspapers in Hong Kong today. I wanted to show you what I was showing them. Basically, over the last 7 years, you can see that these cycle highs have come in at basically 120 weeks, each one of those. And then you'll notice we scaled down from 120 weeks down to 77 and 144 weeks. And that gave us the last high that we had in January of 2018. But the important thing to look at here on this Hang Seng chart is where we were just 3 weeks ago, when we were setting exactly at the 61% retracement of the low in December of 2016. That also happened to be the contract low from 2016 made in January, just 11 months before, was an exact 50% retracement. That number was right at that number, 26,000. 26,200, I believe, was the exact number. Now, what we're going to do now is we're going to go into a little bit smaller time frame so you can see this, because we were showing this several times here in the den. As we look at this daily chart that we're going to see here in the Hang Seng, you'll notice that when we got down there at that 26,200 and change, we were making a beautiful 3 drive to a bottom pattern. It was just absolutely spot on. In fact, you can't even make this stuff up. It looks so good. But that was a perfect ABCD pattern from July 23rd into August 15th. up into August the 27th and down into September the 12th. And as we know what September 12th was, boys and girls, that was exactly 2 days off of the new moon. And that happened to be that big festival that they have in China known as the Mooncake Festival. All right, now let's see what we should do from the Hang Seng right where we are now. You'll notice that we completed the ABCD pattern up here at the 78% level, just spot on, 28,000 even. Now what we'd be looking at if this is really a bullish market is to see a nice, and that was done 3 days ago. If we could see a nice 3 or 4 day correction, let's say 5-day correction into 27,200, that would be a beautiful 135 pattern on the upside. So the trend, you know, from being down would be going to the upside. But right now the trend is certainly down. You can see the lower highs from July 23rd, August 27th, and September the 24th. All of those are lower highs. That defines a trend. So we get above 28,200, the trend is going to change. But until that happens, Nebahachi will not happen. So let's keep an eye on this one. This is going to be very, very interesting. Now we have one other one that one of our listeners asked us to check on, and that is that I don't know what the name of the stock is. Truly, or I don't know what it is. It's TLRY, and we'll put it up here. I know it's got something to do because it was a big one, but what we were talking about was the big ABCD pattern, and this going back from the 18th when we had that run up where it got to $300. It dropped over $200 a share. You can see the ABCD drop right down to 97, and we rallied from 97 all the way up to 47. Yeah. You want to figure that out mathematically, boys and girls? This is one rock and roll stock, and that was done in a period of 4 days. Looking good, Billy Ray. Feeling good, Lewis. That's like trading orange juice futures, for heaven's sakes. But that's a wild one. Now, what we'd be expecting now is that this area around 150 is going to be a 382 retracement of the move from that we made back from the 20th, which was around 248 bucks a share, exactly. And then down to the low we made at 94.54. The 382 on that comes back at 154. So let's watch this just to see what happens and see if it's going on. TLRY. I don't know what it is, but can someone tell me what TLRY is? Because that's beyond my pay grade. I don't really understand. It's Terwilliger or something like that. It's always in the news, but I don't know what it is. T-Ray. Is that like Billy Ray? Is that one of my cousins? Shut the front door and raise our rent. All right, let's look at one that's in the news, folks. We might be able to visit our good friend, hold on just a second here. I got to get this chart up here. Here we go. We got to get Mr. Musk up here and start talking to Mr. Musk today because Tesla is under some problems. And as you put this up here, you'll notice here we had a big ABCD structure measuring down to 226. That's a 1.618 expansion of the 382 retracement. It stops at 326. And big ABCD 3 drive there. Folks, it's going to 228, 226. It's trading at 268 right now, but that's what it looks like to me. That's a pretty big move down.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're back, and we want to take our hats off to our good friend Mr. Z. He alerted us to the silver yesterday, and bada bing, bada boom, it hit the exact 61% retracement at 1421, and it didn't stay there long enough to catch a photo on an Apple phone. Boy, it was off to the races, and we've moved up about 26 cents so far in the silver. So this could, the fact that it's coming out of here so strong, lead to an ABCD structure up there around, you know, 1480. We're trading at close to 1450 right now. So that's a pretty big move to start off with. Now, I want to mention one other market that we follow quite a bit, and that is we were talking about the euro and the dollar index this week. That was how we started the week, of course. We always like to watch what the money's doing, and we were watching this ABCD pattern here in the U.S. dollar index. It completed on Friday at 93.21. Look at it closely because it is a absolute perfect A, B, C, D, measures exactly perfectly. And if you were to count the number of days between the highs and the lows, you're going to see that that symmetry is still pretty much spot on. And that adds a little bit more to your quiver for your arrows because it was exactly at a 382 retracement of the low in February. That's why it was so very, very important, because Gartley said you want to buy those ABCD patterns in a new bull market. And if this is a new bull market, at least it started out in the right direction. As you can see, as where we were, and it's already higher than this was as of last night. And as you can see here, we've already rallied up to that 94.80 level. And after the ABCD completed there, you know, off to the races is, you know, we've already exceeded the move in the BC swing that we had back in August. That's another telltale sign that looks like the euro is getting, and because the dollar index is the reverse of the euro, that means the euro is most probably getting ready to go a little bit level. Mr. Z is asking, what level does the E-mini have to drop to get a meaningful decline? Well, it's trading at around 2,900, I believe, right? I think about 2,400 would probably make somebody bearish. You know, Mr. Z, let's be honest here, right? I have been wrong about this stock market. I mean, I'm still bearish, and it's been going down. But every time we get a good break, the darn thing just comes back. And if you notice today, we went down and tested possibly a double bottom. The key today, that number I believe is 2875, Mr. Z. That's what I think it is. I think it's 2875. But if the market gaps down today, and I mean it's down already, but if we don't rally today, this is what's going to be interesting. Now, the key to this could be the money market. When we're watching the Goldman Sachs and we're watching the banking index, those are the banks, folks. Those are the guys that have the cash registers, and if they're not giving out money, there's trouble in River City. So this is what happened. Well, I don't want to go back. 2008 in October, when our good friend Mr. Bernanke said all the lights are green. And who said that this week? Mr. Powell said all the lights are flashing green. Boy, that's enough to make you move over from when the fire trucks start to come. So anyway, we'll watch it, but that's what it's looking like to me. I really don't know, but well, I'm a really good short-term trader, folks. You put me in a market for a few days, I know exactly what I'm doing. Longer term, hey, folks, look at this chart. This is a flat-out bearish chart. Let me just get this up here and let you take a look at it. These are the ones that we talked about in the newsletter. You had a 3 drive to a top pattern, a beautiful Gartley pattern on the retracement. You did not take it out. If you take a look at the long-term chart of the Dow Jones Industrial Average, you can see here that now it looks like we have a potential of actually making a double top somewhere in there. Maybe it is, maybe it isn't. I don't know. I'm just looking at patterns. That's it. But if you look at the overall stock market and compare it to the New York Stock Exchange Index, you can see that the New York Stock Exchange Index did not make new highs. That's a pretty big divergence. And you can see the NASDAQ up there. That's, what we just showed you is just doesn't look that bullish, If you have lower tops and lower bottoms, you're in a downtrend. If you have higher tops, higher bottoms, you're in an uptrend. I want to talk to you just a little bit about the importance of where we were last night in the euro. And if you'll give me 1 second here, I will get it up. I hope, there we go. I think this is it. There we are. Let's get it up here, and here we are. Okay, from the 10th of September to the 21st of September, we made a perfect A, B, C, D pattern exactly at 1810. That was the high. The high was 1812. What we did yesterday on the 27th of September, you'll notice that red line. You see that red line where it stopped and then rallied for several hours up to 117.20. Folks, that was a 78% retracement. And if the market was really bullish, it should not have taken that out. And you can see after that occurred, it's just been a one-way carrying, well over 150 pips just straight down. So that's why when they break those key levels, that's when it's very important. That's why the key level at that, I believe it's 29.05, I believe, in the E-mini S&P is so very, very important. Since we're here and looking at this, why don't we just get up here and take a quick look at it and just to see where we are, because we're getting ready to open and we do have a minute or two to pull this up. If I can just get the old computer to do what it's supposed to do, and then we'll see where we are. This is going to, yep, 2906 is the number you want to be looking at. But that 2906, it might be a trap, so you got to be careful here. Let's just bring the, yeah, that's right at a 61% retracement. So it's been there 1, 2, 3 times. So watch that 29. Oh, let's put the chart up. Watch this 2907, folks, because that's going to be a real interesting one, to pay attention to. Now, the Dow Jones is by far weaker than the, at least during this past week. The last weeks it hasn't been, of course, but that's pretty much over now because the banking stocks have given up the ghost, and that's why you're seeing these big swings, in the Dow Jones Industrial Average. So those are just some of the ones that we're, sort of keeping our eye on today, just to see, what is or is not going on. That's the main thing. Let's take a quick look here at the Treasury bonds. I believe that we were talking about those this past week. I want to get this up here so I can show you what we were looking at. You'll notice down there at that put this up here 1 second. Okay, yep, the DXF, that's right, 94.90. Anyway, you'll see they had a lot of support here. We're looking for a 382 rally because the market was so oversold. You know, we went down, made new lows into May, didn't really go anywhere. And I got a beautiful chart here, I believe, showing you what I think is going to happen. The problem is if I can find it, and that is the $64 question. And I hope that I can, but let's just take a look here. Here it is. I did find it. So let's take a look at this. When we get back, I want to talk to you about these treasury bonds because interest rates are going higher, and we'll see. I don't know if the euro is going to 106 or not, but we'll look at it long term.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're going to take a look at the long-term chart here of the euro on a weekly basis. As you can see here, we had a beautiful 382 retracement up there at that 118 and change. We're now trading at 115.80 with a big wide range bar down. Now, what I've done is I've done a little ABCD tool giving you an idea of where the market could be going to, and Mr. Z actually posted it before I posted the chart, and that's at roughly 106 in the euro. Now, it isn't going to go to 106 tomorrow. That's going to take a long time to get down there, and there's going to be a lot of swings in between. But that is the potential. We hit that exact 382, and we came off of it very strong. That's a really important factor to remember when you're looking at pattern recognition, because when these patterns work, they work right away. You can see what happened, with the silver. It just literally exploded out of that area. So it's something that should be considered. And whenever you see these wide bars that's always yelling and screaming at you, it's telling you that you most probably are going to give you a lot more than what you have in your first part of the trade. We saw that this past week, of course, in the British pound. We'll put this up so you can take a look at it, because we had this big move in the British pound up around that 133 level. It hit that 78% level, just absolutely spot on. And now we're heading down to, it looks to be the 129.90, and we're going to be there probably either today or Monday at the latest. So we'll see if this is going to be moving in that direction. So we'll have to see if this is going to keep going on. All right, now we didn't get a gap down now in the stock market. We actually rallied a little bit. I mean, it's still down on the day, but it has rallied a little bit, which is actually a pretty good sign here, at least early this morning. The fact that we've had a pretty nice rally. The last rally that we had last night rallied 70 points. So if we get 70 points off of the bottom here, it would take us up to 26. Well, in the S&P, take us up to around 14 or something like that, I believe. But frankly, with all the action we've got going in the metals and the currencies and in the grains and all the other things, the stocks are just, they're an afterthought right now, even though we are short the Russell. That's been the weakest of all the indices, and we believe we are going to be heading down in the Russell. It's been the one that has the most bearish of the patterns that we can see here, because we did not make new highs from August. All we did was make a 61% retracement, and then we've had the sharp move down. And whether that's going to continue or not, we'll just have to wait and see if it's going to go on to that next level or not. Now, we had a really interesting comment yesterday. We were talking about the sugar market, and one of our listeners here at TFNN asked us about the March sugar, and we were saying at around that $11 area, it looked like it would be some pretty good value. And if you take a look at March sugar here over the past 3 months, we made a beautiful 3-drive to a bottom. Those of you that belong to the 24/7 service, we bought it right there on the bottom, and it rallied well over 110 points, which is $1,300. We got out right at the high because that was a retracement from the high back in June, and then we rebought it, of course, and it's still acting relatively well, and that's what we'd like to see. But if you'll notice in the March sugar, which is the new crop for 2019, wow, I cannot believe I'm saying 2019. My gosh, I've been trading commodities since 1959. How many years is that? That's more than 2 years, isn't it? More than 10 years. Anyway, but what's interesting about this sugar chart is we made a new low from August, okay? But look at the ABCD pattern that formed into that. That's where you look for a false breakout of a down move, because you're going to have a nice target down there at 1090. Closed at 1091, and that tells you at that point your risk is going to be like 20 cents, which is only $200 in silver, and you're talking about a contract that's worth well over 12,000. So you're risking very, very little to see if that pattern is going to work. Now, we don't know if it's going to work, but nobody else does either, and that's the key to some of these things that we're watching here. Since we're talking about the growing commodities, let's take a look here at one that we've been very bullish on for quite some time, and that is this is the soybean oil. And as you can see here, we had a beautiful three drive to a bottom pattern, stopping exactly at the 1.618 expansion down there at 27.15. The low was 27.12. We've now rallied two handles. That's $1,200 in about 8 trading days. And the risk on that was about $250, 7 to 1. So your profits objective have been met. The second profit objective is higher into this next area, up in this area. Yes, David, I'm watching Bitcoin very, very closely. I believe we've got a chance here for the market to come down one more time, down to that 4,000 level. I feel really strongly about that on the longer term charts, but right now we're just a little bit below the high of the week, which was 67.54, I believe, which was the high of the week. I really believe this blockchain thing must be really serious, folks, because there's more and more people that are getting into it, and that makes it extremely interesting, you know, to most of these things. I wanted to bring this chart here on the euro one more time. Someone's asked a question about it, because if you take a look at this euro on the 4-hour chart, you can see the absolute beautiful ABCD structure up there at the 1820 level, and watch that 61% retracement there at 1640, folks. That's when we broke down really badly. Now we've gone down to the, you know, below the 78% level, so it's in trouble. The question is whether it's going to hold this level or not. We don't know, but no one else does either. So, you know, pay attention to it, because the way that it's coming off in this first week, after making a you know, retracement like we did on that big ABCD pattern, that is very bearish, folks, because when they come out of here that fast, it usually means that it wants to give you more. And that's one of the things that you like to see, is that you get more. That's what's really really important. Someone's asked me to redo the Tesla, and I'll bring it up here for just a second here. It's trading around 265, I believe. That's down around 12-13%. The price objective on this comes down to 226. You can see that's the ABCD pattern from the high when he came out, and he's in trouble, I guess, because he did some things, lied to people or whatever, you know, who knows? I don't know what it is. Anyway, when he got to that D point, which was 385, that was on a big run up. If you remember, it went from 334 to 385 in one day. Bada bing, bada boom. That was the high. Perfect ABCD pattern up there from May into July, and then up. Just absolutely beautiful ABCD. And that broke down, rallied up right into the gap at the 382 level, spot on at 330. 330, and then we came down to 250, rallied up to 310, and now we're trading at 265. That leads us to go to 226, or possibly a Gartley 222. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we've just had a call from one of our folks over across the pond over there in Hong Kong asking us to take a look at this Hang Seng Index one more time. As you can see, the 3 drive to a bottom that we had back on September the 12th. Right at the new moon, and then we've had this pretty big rally, and you can see we got up to 28,120. That was the exact 78% level. If you'll notice, going back through July and August, the last time we had that, what did we do? We had an exact 78% level of the previous low. Now, if you wanted to really get technical and try to understand a little bit about technical analysis, if you would measure the move between August the 13th and August the 27th, that 2-week time period, and then go down to the bottom on September the 12th and to where we are now on September the 28th, you'll never guess it was the exact same amount at the exact ratio, 786. And as you look at it really close, you can see lower tops and lower bottoms. And that, boys and girls, is how you define what a trend is. So we really need to keep an eye on some of these things as we go through looking at it. Let's take a quick look here at one of the other things that we were watching this past week, because we were really believing that this yen dollar was going to have one big move, and we've really taken off in this one, folks. We've got above the 113 level again. Well, we're trading substantially above it now, which directly related to that U.S. dollar index, going, so strongly after the ABCD pattern that we had at that point. So let's keep a close eye on these as we look at them, because these currencies are the ones that make the markets do what they're supposed to do. And like they said, Bernstein and Woodward said, follow the money, and that's what we're trying to do here. Boy, it is really hard to believe that we have a Friday here already. So it's a really beautiful day here in the desert. It's going to be about 85 degrees. I missed something very important yesterday, folks. Yesterday was Mark Douglas's birthday. We lost him 3 years ago, but September 27th was his birthday, and it had a lot of things happen to us on those days, but it was still miss him a lot, but his wife Paula is doing well, and that's what's really important. Someone's asked a question about the grains. folks, the grains, they're getting a lot of. There's a grain report, as Mr. Z. It's a small grain report. I probably just a supply demand or something. I don't know which one it is, but they're going up in bad news. They're going up whether there's an oversupply, which we're in the midst of the harvest season. The second thing is that we're in this time of tariffs, and that's just telling us that. That's what you're looking at. I don't know how you got that posted so fast, but you're right. The four fears: fear of being wrong, fear of losing money, fear of missing out, and fear of leaving money on the table. Boys and girls, that is what trading is all about. Every single one of those, you go through those every time. The fear of being wrong. Look at that for a minute. You never know where you're going to be right or wrong. The only thing you can control is your risk. Two, the fear of losing money. That's going to happen because you're only going to be right 50, 60% of the time. Fear of missing out. That happens every day because the only way that you're not going to miss out is if you get the absolute high and absolute low tick, and that's not going to happen either. And the same thing about leaving money on the table. The only people that get the exact highs and exact lows are the people that don't make themselves known to us. Those are the boulder bears or boulder banks or whatever they call those dudes. Anyway, let's keep an eye on that because it's going to be interesting what we're looking at. Remember, one of the things that we talked about in the newsletter this past week was the fact that when we had these new highs to new lows, as you can see on the lower part of this chart that we got from one of our good friends that subscribes to the Elliott wave, that we did have this divergence between the new highs versus new lows, which usually means that it's a little bit tricky. And you can see that channel pattern on the top part of that with the NYSE index that we use. And someone's asked me a question of why I don't use Elliott wave, folks. I'm from Terre Haute, Indiana, and we have a hard time counting to 5. The third grade was the year we learned 5, and I was in the third grade for 3 years. So it took me a while to learn to count to 5. So all I know is A, B, C, D. You look at A, B, C, D and try to fit it together, and that's enough for me. I mean, I keep it as simple as possible. This is not rocket science. You don't need 100 monkeys to wash the coconut, folks. It's not that hard. You find a couple of points, you find out what the risk is, find out what the ratio is, and that's it. What else are you going to look at? I don't look at oscillators. I don't look at any of those things. I did them for years, but I found out that they're lagging. And this is a market that doesn't like to lag. It likes to be led, and so that's why I don't use Elliott wave. And I know that it works, and some people are really fabulous at it. But I'll tell you, some of those counts that I hear are really really amazing. So who knows? Okay, let's move on to one other question that someone's asking. Is that about the gold market? Well, we went down and made a new low today at the 1185 level. As you recall here, the number we were looking at in the gold was at 1186. We got as high as 1190. We're trading around 1188 right now. Silver has come out of here like a rocket. It's it made a 61% retracement and rallied well over 30 cents in just a matter of 2 days. So silver is the leader of the pack. Whether it'll continue doing that or not, we'll have to wait and see. But that's what we're watching, at least early this morning. Another person is asking about the cattle market, and we like to follow the December cattle. And we'll put this up here so you can see it. We've been up here all week long. Here in the cattle, up at this 118 and change level. That's going to be a pretty big triple top possibly. So there's a possibility of, maybe looking to sell cattle early next week, but that's neither here nor there. So we'll keep a, close eye on some of these things as we go through and look at them. Okay, and what else we have going on exciting today? We've had some pretty good moves in these currencies, and whether they're going to continue or not, I don't know. We're down to relatively some minor support here at the 115.70 in the euro, but again, that is minor support. Remember, folks, that's 200. Let me see, 110. Yeah, that's 220 points from the high we made early last week. So that's a huge move. So that's another one that you want to sort of keep a really close eye on, because it's one that might come up and look pretty good. The bond market, I believe we've got a chance to see those bonds get all the way up to the 142 level. That would be a 3-point rally from the bottom. And we posted that just a little while ago. Let's bring it up again so that you can see it, because there's a really good chance that we could make that. And that would be a big 1.618 expansion of that AB leg up there at that 142, also matching the high from September 18th. So they love to do that, take those highs out from earlier in the month and then roll it over. Folks, the bonds are going lower. It's just a question of how much they rally before they go lower. That's pretty much it. So let's take a little break. We'll wind her up and start the weekend.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted a chart of the November soybeans. I wanted to highlight that 3 drive to a bottom pattern that we had there. It was, pretty much spot on. So it looks like we've made some type of a minor top in here, but, any type we get a good break, I would be looking to try to find a place to get long these beans, corn, wheat, In fact, wheat looks really nice today, so keep an eye on that one. Anyway, let's take one. When we end up here, we'll end up with the currencies because that's where we started. Let's look at this British pound. We had that huge pattern up there at 133. Now the target on this brings us down to 129.60. We're almost there. It's only 40 pips away. That's been a really good one for the 24/7 service, so we want to keep an eye on that. And watch all of these currencies, folks, because that U.S. dollar, you know, that's where it's going. I mean, it's really strong today. It could turn on a dime because we're getting right up to a 61% retracement near that 95 level. We'll be reviewing that over the weekend, adding all the others that we look at. We look at the major six, the Aussie, Canadian, Euro, Yen, Pound, and, of course, U.S. dollar. Those are the ones that, you know, really control much. I look at some of the major crosses like Pound, Yen, Euro, Yen, Canadian, Australian, you know, those, and Aussie, New Zealand, but the big ones are the big six. That's where you get the great liquidity. And if you're trading foreign exchange, you really ought to consider trading at the CME instead of trading at a Forex bank, because a Forex bank is charging you like 5 times the normal commission. They don't call it a commission because they call it a spread, but you know what happens when you get a spread. Anyway, let's remember that because it's a very important thing. They usually get a rate of about $4 round turn in the currency, and if you trade by pips, you know, a pip is $10 to $20, 1 or 2 pips. If you're paying $2 on the pip spread that most people do, you're paying 4 times what your normal commission is. So you can save a lot of money by trading. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!